All right, traders, this is Blake Morrow. You were listening to the Lunch Money webinar. Hope everybody's having a great trading session. Happy Wednesday. Or is it Wednesday? Yeah, today's Wednesday. So it's not hump day. This is Wacky Wednesday. Actually, it might be hump day too. If you're looking at the charts, they've got a lot of humps on them, up and down, up and down, up and down. Anyway, it's a very, very crazy session thus far. There's been a lot happening. We've had, just looking in the currency markets, we've had the dollar Canadian come off 200 pips off of its highs from overnight following the BOC. Now, the Bank of Canada, was you know, not that dovish as we expected. I didn't think the Canadian would come down as far as it has, but it's really, been capitalized on with the strength in crude as crude surged near its recent trend highs. But we were stalling there, so that's something to note. But I want to talk about really quick before we start looking at specific moves. Wow, the Kiwi's at new highs, ahead of the RBNZ, by the way. Before we start looking at specific moves in the market, I want to ask you guys a couple of quick questions. All right, we talk about risk management here on the daily webinars. Try to do it, as much as we can. Sometimes, we don't get to. We probably don't talk about it, from every single day because, there's the market's moving. We're looking at different, asset classes and instruments that are on the move, so we're paying attention to those. So we don't always talk about risk management, but most of you guys should know this. So when you take a position on a trade, what should be your maximum risk on a position? Thereabouts, approximately. If you take a position in the market and you're looking at your maximum risk, what's the maximum risk you should have on any one position that you have? Roughly. Some people might be a little bit more, some might be a little bit less, but roughly. Okay, most of you say 1%, half percent, 1 to 2%. Nigel says my max will be around 2.5%. Michael W said 2%. A lot of other people saying 1%, half percent. Ibrahim said 3%. I think that's maybe even a little aggressive. Alan says a Democrat might say 300%. Chris says I use the 2% figure. All right, so most of your answers are around 1 to 2%. Some of you are a little higher than that. Some of you are a little less than that. I would say that's appropriate based on your risk tolerance. So let me say that again. Based on your individual risk tolerance, that means you're trading the markets and you might be a little bit more aggressive than the next guy, or you might be a little bit more conservative than the next guy. Your risk is somewhere between 1 and 2%. I had a trader that listens to this daily webinar. They said, "Oh my God, the Canadian! My account got blown out." Now, this guy, and I don't know if he's listening today, and the last thing he wants to hear from me is a talking to about risk management when he just blew out his account. He's probably not even listening in right now, and I'm not even bothering to look. Okay. But if somebody listens on this daily webinar every day, and let's just say for at least the last couple of months, you've probably got the idea that whenever you take a position in the market, the first thing you should do is you should ask how much your risk is. The second thing you should ask is, does it exceed 1 or 2%? Based on your, maybe, some of you might say 3% or 2.5%, but does it exceed your risk in that particular trade, where your stop is? The first question you should always ask yourself before you get into a position is, what is your risk, and does it exceed my risk parameters? If you ever come to me and you say, "Oh my God, I blew up my account," I don't know if I can have any sympathy for you. I really don't know if I can be sympathetic to that. Because we talk about risk management enough here. to where you say, okay, I'm in this position. I don't want to risk more than, 1, 2% in this one position. If you have a position that wipes your account out, that means you completely and recklessly disregard risk management. Period. And it's hard for me to be sympathetic of that when we talk about risk management all the time, quite frequently anyway. Like I said, some days we don't because the market's so aggressive and it's moving a lot. We don't get a chance to talk about it. But, people will say, hey, Blake, what do you think of the euro dollar here? Oh, the euro looks like a great long. Look, your risk is just below here. You probably don't want to risk more than like, well, I don't know, a percent or somewhere like that, something that's around your risk parameters. You don't want to risk more than that. If you can risk 1%, you risk 1, can you make 2? Oh, yeah, if I risk 1 here, I can make 2% if it moves higher for me. Great. That's a good risk reward. Risk 1% does not mean I'm risking my entire account in one trade, and if I make money, I'm going to double my account. Is everybody clear on this? I don't want to lecture you, but it's upsetting to me when somebody sends me something like that. Because if you are exceeding those parameters, that's your own fault. You have complete disregard for risk management in the markets. You shouldn't be trading the markets. George says, crystal clear. Mirko says, good talk, Blake. And Patrick H said, absolutely. And I know you guys probably aren't going to, most of you aren't going to answer, but at least you're probably nodding your head. Do you know why I do these free webinars? You're welcome, Simon. Do you know why I do these? Do you know why I do these free webinars? Well, I do them because I'm paid by WiseTrade. WiseTrade pays me a salary. It's not a great salary by any stretch of the means. The way I live my lifestyle is through my trading. But I'm paid to make sure that the WiseTrade customers are trained. Okay, but we open it to the public. But do you know why I insist on doing them every day? And I've actually, over the last 10 years, every time WiseTrade management has threatened to, let's take these webinars and not make them free, I've fought tooth and nail to keep them free. Do you know why? To keep them free to the public. And by the way, I've had that fight, and I've fought that fight many times over the last 10 years, and you guys don't know that. I've had many conversations where, we should make these paid webinars. These are paid webinars. I'm like, hell no, we can't make these paid webinars. No. And the reason why is because I do this because it helps me to do my trading, but it also helps you. So myself, Kip, Steve Bealby, Chris Asaro, Paul Franco, anybody who's involved with WiseTrade, we can help reshape the bell curve, because right now there are too many traders out there that disregard risk management. They don't know what it is. They disregard it. They don't care. They roll the dice. They gamble, and then they get taken to the cleaners. And if I can do these webinars and you can listen to me for a year, 2 years, 10 years, 5 years, whatever, the next 20, and you can still trade and be successful and make money, then I personally have contributed to reshaping the bell curve of successful traders in the market, at least the ones that I come in contact with. Because that statistic is bullshit where they say, oh, 90% of traders fail. That's bullshit. That is not a real number. That may have been a real number before, when I first started trading, because there wasn't education out there to teach people how to trade. But I think there are a lot of outlets, myself included, there are a lot of outlets that will help teach traders. Thank God for the internet, that over the last 20 years has really helped teach traders how to be successful in the markets. And I will continue to fight that fight. But if you sit here and disregard risk management principles, the most basic risk management principles, I can't sympathize with you. I can't. And no, this trader wasn't blaming me. This trader was just saying, oh, blew up. I should never hear that from you. Never, ever, ever. You should never, ever say, oh my God, I blew out an account. I know people have done it in the past. Hell, I did it when I didn't understand risk management. I didn't understand leverage in the currency market back in 2001. I think I told you guys a story. I had like a $5,000 account because I was just, getting started in currencies, because I was going to start, talking about the currency market, and I switched from equities. I had a $5,000 account. I didn't know what the quite the margin requirements and rules were when you had 100-to-1 leverage, and I took all these positions, and I got up in the morning, I'm like, oh man, I think I made like $3,000 last night, and then I woke up with a $1,500 account, and the broker margined me out of everything. That happened to me back in 2001, and I had no idea what leverage should do or could do at the time. But I think we've had this conversation plenty. All right. So guys, whenever you get in a trade, the first thing you should do, before you even get in the trade, the first thing you should do is say, oh, okay, if the US dollar Canadian drops below 132, I'm going to have to get out of that trade. And if I get out of that trade, is my loss going to be less than 1% or less than 2% of my account, or 1.5% or 0.5%, whatever you decide? Yes, it is. Oh man, maybe I shouldn't take that trade. Or yes, it is. Okay, maybe I should take a smaller position. And you're right, all of you guys that are saying too many traders go for home runs, it's true. But if you want longevity in the markets, if you want to be here like me 20 some odd years later, standing and still fighting, if you want to be where I'm at in 20 years, or hopefully more successful and made more money and have gotten even further, the one thing you cannot disregard is risk management. Period. End of story. Because without your account, you cannot trade. Without money, you cannot trade. So you better protect it. Sorry guys, I didn't want to get into this big long conversation, but it's something that we need to talk about from time to time, apparently. Maybe I need to talk about it more from time to time. Or, excuse me, I need to talk about it more instead of time to time. Maybe every day we should start off the first half an hour of our day talking about risk management to get it through your heads. I know I'm not going to do that, but you know what I'm saying? All right. Enough said. I don't need to talk about it anymore. But it just upsets me when somebody says, oh my gosh, I got blown out because of a move. I mean, it's one thing if it's the Swiss National Bank. I get that. I mean, that was unprecedented. I mean, I turned a $500 gain into a $15,000 loss overnight, blowing past my stops. That that happened. I mean, that was real. That was real. To me, it was more than 1% loss in my account. But that's an anomaly. In a normal everyday move, when you see a 200 pip move or a 150 pip move, if you get blown out, I can't sympathize with you. I just can't do it. I can't do it. I know a lot of you are not Americans. I know a lot of you are Europeans, Asians, Australians, and you play different games. You don't play baseball. You play like cricket or football, soccer or whatever. But I always like to use a baseball, analogy. American baseball. Baseball is won by getting singles, getting on base. Also, good defense. And good pitching, but now I'm getting into specifics. But baseball games are won by getting on base, getting singles, not home runs, not trying to swing for the fences and get a home run. You will have home runs from time to time. If you look at like your good baseball players, they have 100 or 90 or 100, runs batted in throughout the season. That means they got on base, they got players around the base, and they got them scored. They got a lot of triples, a lot of doubles, and they might have 15, 20, 30 home runs. Okay, you will get home runs when you trade. You will have them from time to time. There are good setups like that. But the key to making money in this business, to having longevity, is getting singles, getting those small wins, booking those profits, and not swinging for the fences, and not taking on unprecedented risk. That's the key, guys. I can't stress it enough. And buying on dips, for crying out loud, and selling rallies. Buying on dips, buying pullbacks, selling pullbacks. There's more to it than just what I've said. But as far as money goes, risk management, it's key. Controlling risk. All right. Anyway, I'm sorry we had to have this conversation. I didn't mean to go through all of this today, but it's so vitally important to your success. All right, couple things that I've done today. First of all, I'm sitting in my dollar Canadian position still.